Hi everyone, welcome to Token Topics. I hope you're doing great out there. Silver is the topic of this video. We're going to dive into the world of silver, and we're going to hear words from Andrew McGuire, who is a British commodities trader and whistleblower. He's presented evidence to the United States regulators of fraud that's been going on in the silver market. We're going to look into that. And Andrew Kiyosaki from Rich Dad Poor Dad believes $500 silver is inevitable. It's on the table. We're going to look into that, and we're going to listen to some words from Ray Dalio on the current crisis, the future, and what we could be expecting. You don't want to miss this video. Watch it all the way to the end. Please do hit the like, share, and subscribe. With that out of the way, let's go ahead and dive in. First, we're going to listen to this clip from Silver Dragons, and the author Rich Dad Poor Dad is going to chime in on $500 silver he believes is on the table. Let's go ahead and listen.
Well, he's been around for quite a long time. He's written a lot of books. He does not like the dollar. He does not like the stock market. He's really into alternative investing, so precious metals. He's into cryptocurrencies. He's into property, stuff like that. So he's not really into like your traditional 401k investing and that type of stuff. And he definitely hates the dollar. That's one of the things that him and I both have in common. But he does talk about gold and silver quite a bit. And he recently put out a few tweets talking about how silver could go over $500 per ounce. So we're going to start with his most recent tweet and then work our way back in time. So this one came out on October 2nd, and he says, buying opportunity. If Fed continues raising interest rates, US dollar will get stronger, causing gold, silver, and Bitcoin prices to go lower. Buy more. When Fed pivots and drops interest rates, as England just did, you will smile while others cry. Take care. So basically he's saying, look, buy the dip. The Fed is going to continue to raise interest rates. We think that they're going to raise another 75 basis points in November, and eventually they're going to pivot. So while rates keep going up, the dollar is going to keep getting stronger. Silver and the dollar are basically opposites. So if the dollar goes up, silver goes down. If the dollar goes down, silver goes up. So he's saying that eventually they're going to have to pivot. They're going to stop raising interest rates. This is going to cause the dollar to get dramatically weaker. And when that happens, gold, silver, Bitcoin, they're all going to go up. Now, silver is probably going to go up the most because it's the most opposite to the dollar, right? If you look at gold, sometimes gold and the dollar, they go together, for a period of time, or even Bitcoin and the dollar, they can rally together or fall together, but silver and the dollar are pretty much always opposites. So if you want to invest in gold, silver, or Bitcoin, I would say silver is probably the best one to invest in. But anyway, he also does mention that England is dropping their interest rates. So England has already pivoted, and eventually the US and the Fed, which is the central bank of the United States of America, they're going to have to pivot as well. And when that happens, you already want to have a position in precious metals. So you don't want to wait for this to happen. You want to be buying them now while the price is low. So buy silver now. Okay, here's the next tweet we're going to look at. This one came out on October 1st. He says, will US dollar follow English pound sterling? I believe it will. I believe US dollar will crash by January 2023 after Fed pivots. To profit from crash of US dollar, I bought many more US silver buffalo rounds. Silver is a bargain. I will not be a victim of the effed Fed. Take care. Okay, not a huge fan of the language, but at least he kind of censored it. Let's break this down. So first off, will US dollar follow English pound sterling? I believe it will. So basically, yeah, they already pivoted over in England. Is the dollar going to do the same thing? He thinks it will. He believes the dollar is going to crash by January 2023.
I'm going to put the link to that video down below, but what do you think, everybody? That's not very far off, and with as stated that China's been dumping dollars. We see all the turmoil going on with Russia and the BRICS nations. Do you think that could happen? Only time will tell, but put it in the comment section. Do you think that the dollar could be gone by January? McGuire, who's a British commodities trader and whistleblower, he presents evidence to the United States regulators alleging that fraud has been committed and that prices in international gold and silver markets has been manipulated. He is a silver bug, and we're going to listen to some words from him and what's going on.
All commodity prices will rise, and due to the effect of 50 years of siloed COMEX price suppression, silver has become the most undervalued commodity on the planet Earth, bar none. I don't think many people dispute that.
So he believes that silver is the most undervalued commodity on Earth. Let's get some more words from him on why he thinks it's so undervalued and what's going on with silver.
There's a huge divergence between what you're seeing on the charts here and what's really going on. And there's no doubt in my mind, though, that the elephant in the room, let's deal with that first, is the mainstream media ignoring the commoditization of the ruble and its impact on the precious metals market. Let's look how nickel-like the silver derivative market really is at this juncture. Now divide one into the other and we arrive at a widely accepted leverage of 250 to 1. In other words, there's 250 ounces of paper silver underpinning each ounce of physical that's been pledged. If the price of silver was based directly on the real physical silver market at 250 to 1, silver's price should be at $5,000 an ounce right now today.
$5,000 an ounce, that's quite a bold statement. But if you really think about it, considering how messed up and manipulated this whole monetary system is, and if there's a lot more in paper in circulation, who knows, it very well could be. Considering that this man knows his stuff and he's been well educated in silver, he very well could be very right.
So what does it mean? Now, when this derivative blow-up happens, and by cracky it will occur in the physical market. It'll not spring out of the COMEX, the CME, or the SLV rigged machine. They will be impacted, but it won't come from there. Because that's where, if you remember, that's where the Hunt brothers got rinsed, like any other paper speculator, because the silver was borrowed from the house. The house never had any silver, and the house called in the credit. End of story. So SLV has proved itself to be a derivative flywheel. It's very vulnerable. SLV has proved itself to be a derivative flywheel. It's very vulnerable. And one must remember, the nickel black swan event was a direct reaction to Russian sanction blowbacks, unraveling leveraged short bets that were exposed to physical demand. They blew up, sparking the LME to go on record, and I remember the quote clearly in my head, "It has no direct visibility of over-the-counter transactions and positions," end of quote. I remember that. The latent beach ball effect in heavily capped silver is going to be even stronger. Now, technically, fundamentally, and structurally, capping silver into a known large over-the-counter options expiry is undoubtedly related to the squaring up of a very large chunk of the naked short portion of the recorded multi-billion-dollar OCC derivative position we've been tracking and going public on. The unprecedented is, as we usually say, how much physical do you personally own? Now, it's going to become increasingly difficult for the mainstream media propaganda machine to gloss over that the strategic commoditization of the ruble is now firmly underway. Silver is, as he says, the fuse to break the financial system.
Is silver going to be one of the fuses to ignite this financial crisis? I guess time will tell, since silver plays a major role in this monetary system. Now I'd like to show you some newly added pieces to my silver collection. Then I'm going to let you listen to some Ray Dalio. Okay, so here's some silver I recently purchased. This is a 5 ounce from Sunshine Minting. This is a 5 ounce bar. And what I love about it is it has a security feature. All Sunshine Minting products, they have a security feature on them, and I'm going to show you how to use that in just a moment. Then I also got these from Pinehurst Coin. These are a couple of ounce rounds. So you got the 5 ounce bar right there. And then I have a couple of these ounce rounds. These are also from Sunshine Minting. The Metals Exchange Company is from Sunshine Minting. And then also I have this kilo bar I want to show you. I got this one from SD Bullion. I'm very happy with it. I bought for it. Came in a nice box. And it's just a beautiful bar. Has a lot of weight to it. It's the largest bar that I purchased. Very, very happy with it. So these are my latest additions. Kilo bar, couple ounces, and then a 5 ounce bar. Just purchasing little by little. Now, I'd like to let my audience know that I wouldn't consider myself a silver investor. It's more of a hedge and protection to add to my portfolio. It is part of my portfolio, but my true investment, what I would consider an investment, is in digital assets or cryptocurrency. The reason why I believe it's good to have some silver in your portfolio is because of no matter what kind of crisis happens. What if the internet goes down, we have blackouts or whatever, or something, a disaster in the world, you could still have some tangible silver on hand. But I did not put the majority of my money, because the majority of my money would be the investing. The investment part is into cryptocurrencies, digital assets, as I go over on this channel, XRP, XDC, XLM, Quant, and so on. If anybody's thinking of a good idea of how to diversify their portfolio, definitely the digital assets. Those are going to be your big money makers, but it does not hurt to have some tangible in your portfolio in case of an emergency or whatever happens, and you can always quickly sell this. Now I want to show you this cool security feature that Sunshine Minting has. That plastic card that you see, you can purchase that on eBay. I think it's about $20, but watch what you do to see if it's valid. So you take the card, and any Sunshine Minting, either if it's a bar, if it's a round, whatever, it all works the same. So you flip it onto the back, and you see that little circle? That's a security circle. So you take this card, this transparent card, and then you're going to put it up next to it. And then you're going to twist it. As you slowly twist it, you should see a sunshine. See the sunshine? I'll twist a little more. See that sunshine? That's showing that it's valid, but there's one more part. It's also going to say valid. So take the card. We saw the sunshine. If you keep twisting it, keep twisting until you see the word valid. And right there, you see? Valid. So we know that that is valid. That's an authentic bar. And that is a really cool security feature. So again, they sell those cards on eBay. They're $20. And it's a cool way to check and see if your silver is real. Awesome. Let's end by listening to some words from Ray Dalio, who is an American billionaire, investor, and hedge fund manager. He served as co-chief investment officer of the world's largest hedge fund, Bridgewater Associates, since 1985. He's very familiar with markets. Let's give him a listen.
Same for every individual, same for every company. If you understand this, look at your income, expenses, and your savings. And then do a stress test so that you get yourself secure. The same things happen over and over again through time for basically the same reasons. A lot of these things happen once in a lifetime, you know. And if you don't go back and see how they worked over time, then you're in trouble. So there's a pattern. I could describe the pattern, but there's a pattern that happens over and over again, and we're in a particular spot in the pattern. And then to understand it, not just because it happened before, but to understand mechanistically how it happens, and then one has a sense of how to deal with it.
So speaking of the mechanisms, what's influencing this more? When you started looking back into history, are you looking for this sort of moment in the debt cycle, or are you looking for pandemics, a collision of the two? What do you think influences this more?
Well, pandemics come along occasionally, but anything that's important. Let me say the three most important circumstances that existed before we had the downturn, which was caused by a pandemic, but any downturn would have produced the same results. The three most important things that are happening in the world now are that we're at the end, late in a long-term debt cycle in which central banks cannot control monetary policy the same way. They can't lower interest rates. They can't get money to a lot of people who need the money in the traditional way. So just like in 1929 to 1932, there was a debt crisis that came as a result of an excessive amount of debt in the boom years. And then when you have that in 1932, we hit zero interest rates. And when they hit zero interest rates in 32, like in 2008, central bank prints money and buys financial assets.
When you talk about financial assets, this is one thing that even I found myself a little bit confused by. What is a financial asset?
Well, mostly bonds.
Okay.
Central bank is allowed to buy bonds, and mostly government bonds.
So if you were going to describe what a bond is, like what's the easiest way to think about a bond?
When someone borrows for a number of years and has to pay back, makes a promise to deliver currency, that's a bond. And so one man's debts are another man's assets, which we call a bond, and that is a promise to deliver currency. And so what happens in these cycles is that normally central banks can stimulate the economy by lowering interest rates. But when you hit zero interest rates, that doesn't work. So the last time it hit zero interest rates was 1932. And what they did in 1932 was the same thing they did in 2008. And that is that the central banks prints a lot of money and buys government bonds. And so we're doing that now.
And just to be clear, the reason that they're doing that is so somebody has bought a government bond. The government is basically saying, hey, you, dear person, lend me the money. I'm going to build something, roads, whatever, but I'm going to pay you back in a year, 2 years, 10 years, whatever, plus interest, I would assume. That makes it worthwhile. And the reason that the government is going in and buying those is to give back liquidity to the people that have loaned them that money?
Yes, because think of it this way. The central government, and also companies and individuals, don't have the capacity to create money. So the central government has the right to determine they can tax people, they can get money from people, and they can spend money on whatever they want to spend money on. But they don't have the right to print money and create money and credit like the central bank does. Central bank is the Federal Reserve. Similarly, the Federal Reserve does not have the right to spend money and determine how it's spent. That's for Congress.
All right, so before, because this can get so confusing, and I'll play the role of the layman here and just make sure that we walk through things. So the Federal Reserve, I think most people think, is a department of the government, but they're not. Are they a private bank?
No, they're a part of the government that the system has put into place so to get the creation of money out of the political system.
Okay, so it sits sort of outside of the political sphere of the government?
It is within Congress, but it has a set of rules, like the Supreme Court has a set of rules. That means that the president can't control it, the Congress can't control it, that it's operating in a separate way. And so the important thing to know about this crisis, and that it happened in the 1930s, is that in order to get the checks that we're needing, a lot of people, a lot of companies need checks. Now, where will those checks come from? So there'll be checks from the government. The type of support we're going to receive is two types of support. Where does all this money come from? So the government, when they say, I'm going to pay more for unemployment insurance, or I'm going to give you a loan for a small business, or so on, where do they get the money from? They either tax it, but if they tax it, that's bad. So the government, they can borrow it. That's what a deficit is. The government runs a deficit. And then the question is, who's going to borrow it when everybody's financially strapped? And the Federal Reserve says they have the power to print money, and they will say, I will borrow it and I will lend you the money. So the Federal Reserve is lending the money, and it is also lending others the money.
All right, so really fast, when they print money, are they literally sending a Brinks truck with bags full of cash and distributing it through local banks?
No, money is digital.
Okay, so they're literally just making ledger adjustments in a digital file somewhere.
Right. The important thing to know is that all that we think about money is not limited in any way, like there's a certain amount of money out there. It's all make-believe. It's all, so they can change the digits and then they can create money. Now that's an important consideration, because if they can create money so easily, how do we know it's going to be of value when they're creating a lot of it?
Well, everyone, I want to say thank you for watching another edition of Token Topics. Please put your comments down in the comment section and hit the share. Well, everyone, I want to say thank you for watching another edition of Token Topics. Don't forget to hit the share, like, subscribe. Stay safe out there.